Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us this week is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, there's a lot to get into. We've got cattle on feed numbers to talk about today. We've got retail prices to talk about today. But to kick things off, let's go ahead and take a look at this weekend markets. And for the first time in a long time, there's a whole lot of not a lot of bright spots as we take a look at the livestock sector.
That's right, Megan. As you look across the board, it's been a pretty tough week. If we start on the cash hog side, we're down about $2 on cash hogs for the week. You know, I think the market in some ways is looking to next week going, we have one less slaughter week given the holiday schedule that's going to be coming. That certainly, I think, weighed on hog prices this week. The current month lean hog futures were also down about $2 for the week. When you look at the pork cutout value, still flat roughly for the week. So no negative news there to report, and still almost 10% above where we were a year ago at this time. Much of that strength, I think we have to thank pork bellies. As pork bellies continue to move higher, we were up nearly $10 for the week. That really puts pork belly prices back about 24% above year ago levels. So some good news on that front. We'll have to wait and see just how high pork belly prices go as we move ahead. On the cattle side, also a lot of weakness this week with fed cattle down cash about $4 across all markets. When you look at feeder cattle prices, I'll call them anywhere from $1 to $10 lower as we move through the week. On the future side as well, we saw weakness in cattle markets. Live cattle futures current month were down about $2, as were current month feeder cattle futures also down more closer to $5. The choice beef cutout value was down $1.60 this week. Weakness in a lot of the cuts across there on choice beef cutout value. The choice select spread did widen substantially this week, almost up to $20, and choice spread as well. It also has been moving in a more positive direction. So we are seeing some demand for higher quality beef continue to move through the marketplace.
And we talked about that several times as it being a risk management tool, and we'll get into that a little bit later. Scott, as we take a look though at least on the cash hog side of things, we know there is a whole lot of market ready numbers coming, ready to come online, and there's a lot of slaughter space. Is that helping or is that hurting us? Our margins really holding on as well.
Well, I do think, you know, we just know we're going to have large runs of hogs as we get through the rest of this year. You know, thank goodness we've brought on some of that additional capacity. I think that's been helpful. That capacity has maybe been a little slower to come on. It's not an instantaneous flip of the switch. And however, though, I think we've been in a much better position than maybe we might have even thought earlier in the year, just given the large runs that we've been seeing of late.
Scott, let's talk a little bit about that cattle on feed report that came out today. A lot of cattle. We'll just preface it with that. I'll let you get into those numbers.
Yeah, absolutely. A lot of cattle. You know, I start by, well, so this month's placement number is the most placements for any month since October of 2011. October tends to be a very large month for us in terms of placements normally, but it's been several years since we've seen ones that we got out of today's report. It's also the most cattle on feed we've had since December of 2012, so it just continues to remind us that we're building the cattle herd, and that's being reflected in overall cattle inventories. When you look at the numbers out of the report today, USDA said placements in October were 10.2% higher than a year ago. The average pre-report guess came in at up 7.1, so we were above the average pre-report guess, but still within the range. On feed as of November 1, up 6.3% out of the report. Pre-report would have said 5.7, so again, we're above the midpoint there, but still within the range of the estimates that we saw. Market in October, also up 5.6%, slightly above the midpoint of the pre-report guess. So when you look across the board, a lot of cattle out of this report. I'm not certain that we really anticipated, you know, much different than that. We knew we were going to grow. However, it's just reminds us of overall numbers that we get to deal with.
Scott, as we take a look at that report, it's obviously a big picture look at the cattle industry. As you dig into it a little bit deeper, are there some surprises as you look at some specific areas across the country?
Yeah, so I think we have to remind ourselves when you look at that USDA report, it's a report on 1,000+ head feed yards. So we know we've got a lot of placements probably occurring in corn areas of the U.S. as grain producers may be looking at an ability to try to run some pretty cheap corn through cattle to help themselves on that side of the ledger, if you will. Out of the report, I noticed that Iowa placements were up 15%. It just reminds me that we probably have a lot of smaller Iowa feed yards that maybe in the past have been empty for a while that this year are likely full. So when you think about that, those placements outside of 1,000+ head feed yards, I expect we're going to get more cattle coming in terms of slaughter-ready cattle in the next several months as we look ahead as well.
The other report that came out this week, Scott, retail prices. As we take a look at that, is there good news on the consumer side of things as we get into that report?
Well, I do think when you look at what we got out of retail prices this week, the choice retail beef price declined for the 4th consecutive month. It ended up at about $5.76 per pound. That's about the same level as we were a year ago at this time. On the pork side, retail pork prices were down about 8 cents on the month. And much of that was as a result of your favorite pork product, retail bacon prices began to retreat in this month's report. So we saw about a 30-cent decline in bacon prices. Just for a little point of comparison, I sometimes think it's interesting to see how these markets have changed over time. Over the 2003 to 2012 period, bacon averaged $3.76 a pound, while pork chops averaged $3.79 a pound. So very near the same prices over that period of time. Yet when you look at where we sit today with bacon prices at $6 plus, yet you're looking at pork chops at about $3.80. It just reminds you how consumer demand has changed for those products.
And I would argue that bacon prices have not dropped 30 cents, but we'll leave it to the experts.
There you go. We'll leave it to the official report to say it's down 30 cents, despite some may not find their prices cheaper in the grocery store just yet.
Maybe not yet. Scott, we've talked a lot about, we know there's large runs of hogs coming. We know there are a lot of cattle being placed. How does that play into the long-term risk management strategies for producers as we look at input prices that are pretty favorable to them right now? How do we manage that risk and stay as profitable as possible?
Yeah, I think you do have to remind yourself that we're going to end the year in beef markets with beef production up nearly 4%. We're going to end the year with pork production up about 2.5%. We're going to have more chicken production as well. So that backdrop certainly reminds us that risk management is important. And I will say, when you look at cattle markets in particular, where futures have been of late, not only has it provided opportunities for feed yards to lock in some profitable returns for cattle being placed recently, it also allowed those that were going to background calves or those on the cow-calf side to use those prices, I think, to talk about some black ink. And you just look at the runs that are coming ahead and some of the risks that you see. I keep counting on my negative hand a lot more risk that prices could move lower than I can count on my other hand that opportunities for prices to move higher. So I really encourage that risk management in this time of uncertainty that might have some more downside risk to it.
And yet we look at opportunities, whether it's with genetics or quality, as we've talked about certified Angus beef and some of those the strength in some of those higher cuts and higher values as really an opportunity too for producers, correct?
Yeah, absolutely. So I go, risk management isn't a one size fits all situation. I always go, you have to start by knowing what your cost of production are. And from there, then you can decide whether there are market price opportunities you want to take advantage of. At the same time, risk management comes in other forms. When you choose to wean calves, what kind of genetic potential do you want in those animals? I think all of those things offer some alternatives they don't fit on every operation yet. Those that can take advantage, I think it's an opportunity to do some maybe not so traditional kind of risk management strategies.
The genetic side of my background, which is where what I studied in college, loves that aspect of risk management to figure out how to make more productive and higher quality and higher grading animals. So it's really a unique opportunity for producers if you have that ability.
Yeah, you know, Megan, I think as we look ahead over the next several months, we're going to continue to find the focus on how do I produce as efficiently as I can, whether it's hogs or cattle. Just given where these markets are and the large supplies we're going to deal with, it's going to be much more on the cost of production side that matters in front of us.
For an economics guy, you have to love the fact that a lot of it may come down to numbers, maybe not traditional profit loss numbers, but those EPDs and those types of numbers as well.
Absolutely. It's going to be very important to be paying attention to the newer technologies that are available. I think it certainly has a chance to help on the bottom line.
Scott, I was in Kansas City last week, and after talking to both the pork and beef associations as well as some other livestock associations, groups really are as we're talking about the Farm Bill and switching into maybe a different type of risk management as it comes to the industries as a whole, the 2018 Farm Bill and livestock groups are asking for $150 million a year for the next 5 years to fund an FMD vaccine bank. It's not something that we talk about on the economics or on the bottom line side of things. It really ultimately is, because a potential outbreak could cost the livestock sector mass amounts of money.
Yeah, absolutely, Megan. When you think an FMD outbreak would just be a terrible situation for us to deal with here in the United States, it's an outbreak of any size whatsoever, which I think, you know, we know if we see an FMD outbreak, it's likely very difficult to contain. It would be devastating to the industry, as both trade would slow down and just overall issues with the amount of production that we'd be bringing to bear. So, you know, the question that I think Congress gets to grapple with is the $150 million estimated price tag a year for 5 years versus the potential of billions of dollars of lost revenue. Again, that billions of dollars doesn't have a high probability, but if it occurs, it's really a devastating situation. As Congress gets to debate the next Farm Bill, of course, budgets matter a lot, and whether they choose this is the best use of some dollars relative to everything else that needs to be funded in the Farm Bill. I think we'll have to wait and see how all of that moves forward.
Scott, anything else this week?
I think we've covered the major topics.
Next week, we're looking a shortened week due to the Thanksgiving Day holiday. We'll actually talk on Wednesday. Cold storage and livestock slaughter numbers both come out. Anything we're looking at specifically in those numbers?
Well, again, I think we can start to look at cold storage and just make sure we're not seeing much of a slowdown or backup of product into freezers. You see pretty large runs of beef and pork production of late. So I think that's one of the keys that we'll focus on next week.
All right. We will talk to you then. Have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins. Have a great weekend. I'm Megan Grebner on Brownfield.